May profits be upon you. How are you guys doing? We had a great week last week. Great week. Lots of profits. The forecast, most of which just played out. Especially for the U.S. Stock markets. The indices, and they will continue to play out this week. There's going to be plenty of opportunities. But let me give a shout out to Drunken Monkey, the founder of Lions Den FX. He has seen it fit to open up the doors to Lion Den FX this month for free. If you want to join, make sure you come on in. Join our free Telegram. Join the free Telegram. The link is in the description, and put a request in to join Lions Den FX. Put a request in to join Lions Den FX. All right. Just send a DM to Drunken Monkey. All right. When you get there, you'll see, just scroll through, hit his avatar up, and tell him that you want in, and you want in on some of his hot signals. He's back from hiatus, and he's ready to get down and dirty, right? All right. Let me give a shout out to Hassan, Pearly, Leslie. All right. Waterfly. I just enjoy your feedback. When you're making money, I feel happiest when you're in profits, especially if you benefited from my analysis. Thank you for that positive feedback. All right. And welcome aboard, Michael King, Adekoya, and Jabba. All right. You guys just stay subscribed, stay up on the updates. All right. Because you saw that I sent a bunch of updates out this last week, especially in the community section. Make sure you check the community section where, where I post messages and whatnot. And make sure you always check the free Telegram. If you're not in the free Telegram, you got to get in it. That's it. You know what I mean? I share stuff there. And come on board. Come on board. Right? Now, let's get down and dirty. Let's look at the economic calendar for next week, right? And what do we see for Monday? Got some Swiss stuff going on with unemployment rate, Westback, whatever. That's all good. These are interesting. These can influence the markets. All right, but honestly, I only look at interest rates, CPI data, GDP data, and those high impact, not non-farm payroll kind of high impact potential reversal kind of that kind of impact. Those are the events I look for, the ones that can potentially reverse a market. All right. These items here, we have CPI data. CPI data is important stuff. All right. Inflation rate for USD, that's on Wednesday. On Thursday, you want to watch out for the jobless claims and all that good, those good numbers and everything. And we have some pound news on Friday for their GDP, and also US has consumer sentiment. That's on Friday. You want to mark these events down on your charts. All right. I put it on my charts because I forget. All right. I just make a little notation on my charts, and that's it. Okay. Now, let's take a look at the RT Money Meter. The RT Money Meter tracks the rate of change of each individual currency futures. All right. The currency future of each individual currency, and I track it over 15 weeks. That's about 3 weeks, every 3 weeks. And I update this every week. I update it every week so we can see the incremental changes that happen on a weekly basis. All right. But the rate of change, these numbers reflect a 3-month window. Okay. So what do we see? We see US dollar is still number one, a marginal decrease, all right, from 544 to last week to 521 this week. All right. We see the Swiss franc, a marginal increase, all right, from minus 0.89 to minus 0.44. Relatively strong, right? The CAD is relatively strong, from minus 144 last week to minus 167 this week. All right, marginal change, a marginal decrease in strength, this margin is negligible. All right, the yen from minus 520 last week to minus 466. Actually, this is swinging up, even though you see the ranking has changed. I don't understand why that number is there. Okay, let's make sure we save that. All right. What do we have? The Aussie. The Aussie. Look at the Aussie. Moved up to number 4. Last week it was at minus 571. It's at minus 457 this week. This is on the upswing, right? We talked about the yen already. The euro is at was at minus 548 last week and minus 557 this week. Marginal decrease, but something we're going to keep an eye on. All right, it's one of the weaker ones. The pound minus 678 last week, minus 584 this week. All right, it is on the upswing, along with the New Zealand dollar, which was at minus 732 to a minus 587 this week. This one is moving up as well. All right, even though they're weak, they are moving in the upward direction. Now, we'll find out what exactly that movement, that momentum actually means by looking at each individual currency. Let's start with the Dixie, all right? What do we have? Let's look, I want you to bear something in mind. I got a COT report up here, right? The COT report that was came out on the 2nd of last week, all right? 85% of the big boys, the banks, are long on the US dollar. 85%. All right. They closed 3,419 long positions, taking profit. And they also closed minus 2,231 short positions. They closed short positions, right? What I want you to see, which is very clear to the eye, higher highs, higher lows. All right. That's the daily. All right. That's the daily structure there. All right, if we go to the weekly, you can see it's a very strong trend to the upside, very strong. All right, there's no reason to think that, oh, we found a top and we're getting ready to hit bottom until this trend is broken. Look at this weekly, look at this weekly trend. Look at it. Is that weekly trend broke? Is that weekly trend broke? We had 2 weeks of down movement, of a retracement. That's all that was. It's a retracement. You know, you can't overreact thinking that, oh, we are on the downtrend. All right. No, till that come on, man, what am I doing? Oh shoot. I don't know what just happened. Okay, that's what I wanted to do. Now, what I want you to see on the daily is the swing structure on the daily. All right. This was a higher high. This is the pullback of the low. This is the low of the pullback, right? And then we break higher. All right. And then we have another pullback. After every impulse comes a correction. And that's all this was, a correction over days. All right. About 2 weeks of correction. All right. This is the way an uptrend moves, with a impulse and then this correction. Shouldn't we expect price to go higher and take out that high? All right. That high is expected to be weak because it didn't make a new low. All right. So if it's weak, that means it's going to be targeted for liquidity until it doesn't. All right. But right now, you can see that price has taken this demand zone, a daily demand zone, came here, respected it, engulfed the previous candles, and moved to the upside. Yes, we had a pullback. And how did Friday close? Very strong bullish. And I'm expecting more bullishness to come. Yeah. All right. We also have an interest rate hike coming in September. And I'm pretty sure because of the strong labor market that just look at this is from non-farm payroll. All right. The strong labor market puts whether the US is in a recession or not in debate. All right. They are debating that now. Just because we had 2 GDP reports in a row showing contraction, that is that's been used for years as the technical signal that the U.S. is entering a recession. All right, but with strong labor numbers, that puts that in question. So we'll see, but I'm looking for more bullishness. So are the banks, by the way. That's what I'm trying to tell you here. So are the banks. The banks have been bullish on U.S. dollar for at least 3 weeks. All right, at least 3 weeks and more. All right, so and that number went from 82 to 83 to 85%. That's increasing. All right, that's the big banks. All right, so I would be buying U.S. dollar. Let's move on to the Swiss franc. All right, the Swiss franc ranked number 2. All right, do I have this in the right order? Nope, I don't. I just want to make an adjustment on that. Okay. Where did I go? Okay. Just want to make an adjustment on that. CAD, Aussie. Why didn't you move? Okay. You're not gonna play along, huh? All right. Hold on. CAD. Why won't you get your hind part up there? I don't understand. Okay, I'm gonna leave it alone. Okay, so just don't feel like playing apparently. So what are we? I'm looking at the Swiss franc. Swiss franc. I need you to. This one you have to look at hard because this is the weekly, and you can you see that have that arrow there. It's bearish. Why? Because we broke structure, a very important area where we broke, where there was a major breakout to the downside. Once you break structure to the downside, a bearish break of market structure, then you are bearish until the high prior to that break, which is here, is broken. This is when you start thinking bullish. Or when you can say with confidence, the market has turned bullish. Okay, this is a correction from an impulse. We just went over that. Bearish impulse, a complex correction. All right. After an impulse like this, especially a lengthy impulse like that, you expect a lengthy correction. All right. And what are we retesting? Twice. The breakout level. Okay. So we are bearish until we start breaking swing structure, the weekly swing structure to the upside. Now, we can do that. We can declare that early. Doesn't mean that we can't take the hints of lower time frame. All right. The lower time frames will turn bullish way before the higher time frames. All right. We don't have to wait until we get up here to start buying the Swiss franc. All right. On the daily, we can easily see higher high, higher low, higher high, higher low. This isn't really, it's a higher low than this technically, but it's not really a higher low until it makes a higher high. Higher lows make higher highs. You understand? We didn't get that break. We had a rejection, a very strong rejection, I might add. What makes it so strong? Look at it. Look at that bearish engulfer there. That's a bearish engulfer, engulfing the entire candle prior. All right, the previous candle. This is telling me that we have some more bearishness coming. Price went down, came back up, retesting, and then we had a very bearish close, creating more liquidity down here for a price to come and get. All right. I suspect if we see a sweep of these highs, the daily supply that was created, the daily supply that was created. Come on, man. The daily supply that was created here. These highs could get swept as price comes back in here and then drops down. We may be on this level for a minute. We may be on this level for a minute, but just understand that the Swiss is one of the strongest of the currencies. All right, just remember that. Bear that in mind. All right, we just because we may be heading down doesn't mean that we're going to get weaker. It has to break. It has to break this before I start thinking bearishly. Just straight. It's turning into a straight bear. This isn't the reversal. We're still in a higher time frame correction, and we could see price turn around at any point and take out this high. You understand? All right. We're in the supply here. And that's what's, come on, man. And that's what's rejecting price. So, I'm definitely thinking bullishly. I'm thinking to buy the Swiss. I'm not saying get in there and start buying Swiss futures right now, because this isn't the area that I would be taking buys in, especially after a bearish close on Friday. All right. Just extend this over, because this is your supply. This is your supply that is being respected. We haven't gone past the midpoint of this zone yet. All right. We could come up and test it, and then, price is kind of bullish neutral as it does this. You understand? But we basically, this is a strong currency. Let's move on to the next one. That would be Canadian dollar. Canadian dollar. The COT report that came out on the 2nd. We have the banks are 63% long. They've added 1,928 long positions, and they've closed shorts, 2,500 of them closed shorts. Okay. Now, why am I bearish? Well, look how long it's been bearish. Let's go to the weekly. All right, we had this nice break of structure to the upside here, but this is weeks. Each candle is weeks. This is a lot of time spent in a downtrend on the weekly time frame. So we are definitely weak. Look at the swing structure from this high to this low, to that lower high, to that lower low. You understand? Until we break that high, I'm not buying the Canadian dollar. Okay. I'm thinking to look for areas to short the Canadian dollar. All right. If we go to the daily, what do we see? All right. We see that price has a major breakout level to the downside, right? And we have some swing structure here. All right. Impulse. This is the low, the swing low. All right, this is the higher time frame trading range. All right, we finally get a break and close below that. That's bearish. That's bearish. But we have come back into this area to the internal, to make internal highs and lows. All right, but I like the fact that we have this going on with the daily. All right, that gives us some clarity. This is down. Okay, this is a significant pullback for me on the daily. This is a change of character here. This is a break of structure to the upside. Yeah, we barely got a close above it, but I am on the daily. This is bullish movement. All right. On the daily, it's bullish. All right. The overall trend, the higher time frame trend, is bearish. But on the daily, we see a change of character. So, what am I expecting? What am I expecting? Price did react bearishly here. All right. And I believe this is going to be inducement because I believe we're going to end up hitting this. All right. Why would we hit this? Because it makes sense from a swing point, a swing high and swing low perspective. We've hit the 618. All right. That's fine. But this would be well within the pullback range. And this is an unmitigated zone of supply on the daily. Okay. Could we continue lower here? We certainly could. CAD is, again, like I mentioned, marginally heading, it got a little weaker, which is illustrated by this candle here. But we are coming right back and testing at this zone where we see the sell-off here. And I'm looking at that zone and I'm thinking we're going to have a bullish reaction. So be careful here. Though we have a nice impulse, and this is a corrective looking movement of price here. I believe that we're going to go up higher. I do. This is one of the stronger currencies. And just like oil, because it kind of follows oil, it's very heavily influenced by oil. The price has come down a little bit, and I do believe we may see price turn around somewhere, quite possibly next week. All right, so that's my outlook on the Canadian dollar. I think on an individual basis, we had an upswing. We're having a pullback, and I do believe we may continue higher because of the breaks of these internal highs here. All right. Does that make sense? I hope it does. Smash that like button and leave me some feedback. All right. The next one should be the Aussie dollar, but I don't understand why it won't move up. I don't understand this. I do this all the time. I don't understand why it won't move up. Nope, that ain't working either. No, it won't. It just won't do it. It won't rearrange. Why won't it rearrange? I do this all the time. Interesting. Okay. So let's take a look at Aussie dollar. Aussie dollar. Why? I got a big old bearish. Come on, man. I got a big old bearish arrow on that because we've been bearish for quite a while. We've been bearish for quite a while, making lower highs and lower lows, right? As long as we're breaking lows, and protecting highs. Now this one wasn't protected, but it came back and got this low again. All right. As soon as we break that low, that's when we're bearish. Just understand how structure works. Lower lows, lower highs. That's it. Okay. Now, where's the last break of market structure? All right. When we talk about swing structure, that's why I have these green dots there. That is a lower low, lower high. And then we break that lower low here with a lower low, right? We got to pull back a daily swing high and then a new lower low. This is actually the swing, the higher time frame swing low. All right. This also is the daily swing low. Okay. What happens? We break the high. We break the daily high. All right. We have a daily break of market structure here. And we come and test this lower high here. All right. It's a lower high on the daily. All right. But this is an internal high on the weekly and monthly. You understand? All right. This is a lower low, lower high, lower low, lower high, lower low on the daily. For the weekly and the monthly, this is one leg of structure. That's what I'm trying to get you to see. Okay. Now we have a correction back to the daily supply. All right. Back to the daily supply. and price reacted very bearishly. Look at that bearish engulfer there. Very nice. Let you know you're on the right track, Jack. All right, we didn't take out the high, which would signal that price is turning bullish. The market is turning bullish. All right. But on this high here, this is an early sign that price was the market was shifting. Okay, early sign. What do I expect from here? More bearishness. Yeah, I do. More bearishness. It's one of the stronger, currencies. It's one of the stronger currencies, like top 4, right? But it's not one I would readily take, look to buy. You understand? I'm not, because look at that impulse to the downside, two candlestick correction, and then another break of that low. Yeah, I'm not looking to buy this one. I'd be looking to sell against it with a stronger currency, especially if it's up against the US dollar. You know what I'm saying? So the COT report is 74% short on this. 74%. The majority is 74%. They opened, they added 811 long positions and added 9,376 short positions. They are 74% short. I think we're going down, don't you think? Even with an interest rate decision on the 2nd. How did that interest rate decision what did that interest rate decision result in on the from the 2nd? I'm going to tell you what I'm going to do, because I can't readily remember. I thought they kept the rate the same. Aussie interest rate. I might be looking on the wrong calendar, man, but there it goes. I'm looking on, just trying to get my life together over here. This week, thank you. All right. And that was on the 2nd. Aussie interest rate resulted in the actual was 1.85. It was expected 1.85. That was so they kept the rate the same. All right. They expected a 1.85 percentage rate hike, and that's exactly what they got. All right. Previously was at 1.35 or 1.35% raise. So we don't see the strength. We don't see the strength against the other pairs. So I'm looking at the pound right now. Let's look at the pound. Shall we look at the pound? No, we shouldn't look at the pound. We should look at the yen. Let's take a look at the yen. All right. Let's take a look at the yen. All right. Now on the daily, I have it down. Obviously, it's down. And you can see these swing highs and swing lows going to the down. All right. And then we have this push up. Very nice push to the upside. Now, that's something to remark. We are inside of daily supply, and you see the reaction to it. I expect more to the downside. I do expect more to the downside here. All right. Yen is actually on the upswing from minus 520 to where'd it go? Minus 466, a little bit of an upswing there. All right. But look at the bearish close on Friday. Look how it's been 1, 2, 3, 4. That it's a bearish week. All right, we had some bullishness into this market. We were saying, yeah, it might have found its bottom. It very well could have. All right, we did break some We had a change of character here, and we had short-term highs here. All of this is one leg of structure on the weekly, all right? And we've come back to the weekly lower high, all right? Lower low, lower high, lower low, lower high. And prices held here. Yes, we did exceed it. We had a liquidity grab here, but we didn't have a break and close above that low, that high, which would signal price is heading up. We didn't have that. So I am still bearish, and you can see how it held that bearish tone, that bearish sentiment here. Okay, that's just something to note. Also, according to the last COP report, big banks are 65% short. They added long positions, 6,621 of them, and closed minus, or closed 12,107 shorts. Closed them, closed those shorts for profit. Okay. We could see price react bullishly here as that is a daily demand. We could see, but we are above the major breakout zone or major breakout level. If you can't see it yet, this was a major breakout from happened at January 2002. All right, we traded below it and jumped right back up. All right, we are holding here, so price could very well come back and test this zone on the daily. Could very well test this zone, which is doing right now. Test that level and fire back up. That's why I have this zone highlighted. We did not break this supply, but we could, and this could turn into a flip. This could turn into a flip, and this could be the extent, the what do you call the extreme of the reaction. We could very well get this for a higher retracement into this zone. If I put my Fibonacci's on this, and that's not a Fibonacci, if I put my Fibonacci on this, goodness gracious, man, why won't you work? This was a 618. So we could be seeing this as, you can see this as a double top. All right, we took liquidity, and you expect the pullback after the taking of the rating of liquidity. Are we heading towards these lows? It kind of looks like we have a lot of doggone momentum to the downside, but I'm looking to see how it reacts once it gets to this daily zone here. That's what I want to see. All right, before I determine that we're going to continue bearish. But just bear in mind, the big banks, 65% short. All right, they are getting shorter on it though. Okay, the numbers was at 71% the week prior, 71% short. Now they're only 65% short. All right, we could see price rebound. This is confirming a bottom. All right, but the bottom isn't confirmed until we break swing structure. All right, we need to break that high. All right, that is a swing, a weekly swing high. We need to break that high to confirm that price has reversed. All right, and that this is the bottom. We're in the process of doing that confirmation. Okay, we'll see. But here is where I want to see the reaction of price. So right now I'm still selling New Zealand dollar, but I'm not too quick to sell it right now. All right, I'm not too quick to sell it right now because it's kind of on the upswing. It's kind of on the upswing. This looks like an impulse correction and another impulse. If that makes sense, just put your Fibonacci to this. Let's get rid of that. so you won't be confused. All right, and this is a 618 retracement to this demand zone. Yeah, I'm looking for a bullish price action here. You know, I wouldn't be shorting the New Zealand dollar just now. All right, and let's move on. Let's look at the euro. And what do we have on the euro? The COP report says 55% of the big banks are short on the euro. Good reason, good understanding on that. They closed their long position 6,349, and they closed 9,122 short positions. All right, they're on either side of this at 55%, and they've been 55% for the last couple of weeks. Half of them are here, half of them are there. But I am bearish in this market. Why? Because it's simple to see that each candle is a week, folks. Weeks of downward trend and breaking critical structures. All right, that's a major breakout level. Okay, look at that. We tried to go higher, failed to, and we are continuing lower. Let's look at the daily. And the way I see this structure is swing structure is broken here. All right, major swing structure. That's a low, that's a lower high, that's a lower low, and we are in correction right now. This here can confuse folks, all right, because it's moving sideways and it goes a little higher, switch liquidity, goes a little lower, switch liquidity, you know what I'm saying? That's doing all of that, driving folks crazy, okay? But just understand that this is an impulse. This is the impulse, a bearish impulse, and we are correcting, all right? And we have not, as yet, as much as I like to try and keep calling it, this is the swing high. This is the swing low down here. All right. We haven't gone up 50% yet. All right. This is weekly swing structure. All right. On the daily, we are lower low, lower high, lower low, lower high. And you know, if we put our Fibonacci's on this trading range, all right, we haven't gone on top of the daily. We haven't gotten into premium price yet. All right. This is a weak kind of pullback, a little barely above 38, just missing the 50. So, you know, we are ranging, and we would have to go into the minutia. All right. And we'll see that on the Euro USD. We'll have to go into minutia. Is price coming back to this low? All right. We have a rejection here. We have a demand zone formation here. All right. Could we see price come back? I think we could. I think we could. Do I want to be buying the euro right now? No, I don't. Would I recommend it? No, because we're in the downtrend. All right. I like to trade with the trend. Do we have a trend change going on here? Well, we have a change of character, but we don't have a confirmed change. You know, we don't have a confirmed break of market structure to the upside on the daily. All right. But a change of character, you know, yeah. And we have to see how this shakes out. I need to see a break and a close above these highs. I need to see a break and a close below these lows, a break and a close, a candle body close this way or that way to determine if we're done with this pullback or the pullback will go deeper for the above the 50% level to maybe the 618 golden ratio. We don't know, right? But I am a seller of the euro. I am a seller of the euro. The next one would be pound. Let's go to the pound. All right. COT report says they're 75% short on it, and for good reasons. Pound has been taking a pounding. All right. We had an interest rate decision on the pound just recently, didn't we? And let me see. When was that? Interest rate decision. They kept it came in as expected, 1.75%. 1.75%. All right. Not they came in at expectations, not higher. So it didn't really, give it a lot of oomph. All right. There was no oomph. And it's dovish. So it, if you look at the weekly, you can see that we've been bearish very hard. All right, that's why that red arrow is there. All right, and I don't see any reason to think of buys in this market. All right, come on, man. Why do you always do that? Lower lows, lower highs, lower lows, lower highs, lower lows. All right, we're in this range, this swing, the swing structure here is that's the range of the trading range. All right, that's the trading range. And what do? We had a nice pullback. All right, we broke some short-term highs there. We had a nice pullback, and I mentioned this in our last market outlook video that we were going to do. I'm looking for price to round over, and that's exactly what happened. And I expect more bearishness. I would definitely be selling. Hear me, selling the pound. Okay. Last and not least, the New Zealand dollar. What are we looking at? The New Zealand dollar is very bearish, right? Weeks and weeks of bearishness, breaking lows, protecting highs, right? Looking at impulse, correction, impulse. All right. That is the swing structure on the weekly. All right. The daily, does that give us a different story? Not really. Very much looks like the Aussie dollar, insofar as we have this impulse to the downside on the daily, a lower low, a lower high, a lower low. Is this the establishment of the lower high? It seems to be to me. It looks very much like the Aussie. All right. And with this, where we have, where we have this swing structure here. I mean, this, excuse me, the internal high here. All right. With this impulse down and this correction, looks like we've established a lower high. Unless price comes back up, I'm thinking this is going to be our lower high. All right, because we didn't exceed this one. All right, and we had a bearish engulfer here at the mitigation of this daily zone of supply, and I'm thinking that we have some more bearishness ahead. Okay, that's the way I see it. That's the way I see it. We did go over the yen, didn't we? Yeah, we did go over the yen. Yeah, 68% short on the yen. So with the New Zealand dollar, why don't I have a COT report up there? I could have sworn I did. There it is. I'm losing it. All right. So they're 52%. They're 50-50 on this COT report, right? And they were mostly short, but it's starting to get up off of those. They went from 55% short to 52% short, talking about the banks. All right. And they closed 790 long positions, and they closed -3. They closed 3,403 short positions, closed those short positions for profit, right? So what are we expecting? Like I said, I'm not in a downtrend. I'm not looking to buy the New Zealand dollar, even though it's slightly it is on the uptrend. It's on the upswing from -732 last week to -584, -587 this week. Kind of on the upswing, but the close on Friday, we're running into, come on, we're running into this, what did I just do? Okay. This is yen. Right. Yeah, there is a zone of demand here, hence all this rejection. All right. But this is a correction. And I do believe we have the bearish impulse coming down. I do believe that we will see some liquidity being taken from these lows. All right. This is a lovely setup for a price to come and sweep that liquidity. All right. And we may very well see another upswing. We very well may see that. All right. But for now, I am selling New Zealand dollar. All right. That's it for this video. All right. I hope you gained something from it. I hope you got a better fix on the actual strength and trajectories of these individual currencies, looking at it through the prism of their futures versions. Okay. Smash that like button for me. All right. And make sure you leave me some feedback. Leave me a comment. I want to hear from you. All right. And do like and subscribe, right? Just subscribe. Make sure you get the notifications for my updates, because I give them all the time. I gave a bunch of them last week. So I do not forget, hit us up in the Telegram if you want to gain access to Lions Den FX and see what the fuss might be about. All right, those hot signals, those hot fire signals. I'll see you in the next video. Thank you.